Bitcoin has been trading all over the map, but arguably in a sideways range. But is this the big plunge that we've just seen below 60,000? Is that the move that's going to be the precursor to much more upside price action as the cycle continues? More importantly, today I've got Steven Goldfeder from Offchain Labs, who's contributing to Arbitrum, to talk about a crazy milestone that Arbitrum just had that I want to highlight for you guys. Of course, on the back half, I've got Tillman and Andrew from Arch Public to update you on the portfolio there. We got a lot to talk about, guys. Can't wait. Let's go now.
Let's go.
What is up, everybody? I am Scott Melker, also known as the Wolf of Wall Street. Before we get started, please subscribe to the channel and hit that like button. As I said, we've got a lot to talk about today. I have an amazing guest who hasn't been on the show before, so I'm going to just go ahead and bring him on. Steven Goldfeder from Offchain Labs. How are you, man? Maybe first of all, you can explain what being a contributor to Arbitrum is when you are at Offchain Labs.
Yes, absolutely, and great to be here. So I'm at Offchain Labs. I'm co-founder and CEO there, and Arbitrum actually started off as an academic project in Princeton, where I was involved together with my two co-founders, and then we spun up a company to develop the software. Today, though, for about a little over a year now, the Arbitrum core technology, the protocol Arbitrum 1 and Arbitrum Nova, the chains have been decentralized. There's a DAO, so we continue to contribute to the technology and are leading technical contributors, but the community really owns the public chains and makes a decision of their future, including technical innovations and as well as spending and the like. And to give you an example what that means, we can create new software. We do, and I'm happy to talk about some of that today, some of the cool new software we've created. But in order for that to get on the public chains, that has to be a community decision. And anybody actually can create new software just like we can to get there. So we are contributing in a very significant way to Arbitrum, and we are the initial contributors to Arbitrum. But today it's an open and decentralized ecosystem.
Right, and as I touched on at the beginning, to bring this up really quickly, Arbitrum surpasses 150 billion in total transaction volume on Uniswap's the first layer 2 to do that. Can you talk about what total transaction volume actually consists of? Is this trading? Is this, actual utilization? Is it fees? What is it exactly?
Yeah, it's trading. It's trading volume. If you look at Arbitrum, and Uniswap is probably definitely one of the top dexes in Arbitrum. If you look at Arbitrum across spot dexes as well as derivatives, Arbitrum is consistently leading in DeFi. And the Arbitrum 1 is leading in DeFi innovation. When someone does something interesting in DeFi, they're often doing that on the Arbitrum chain. And this is a milestone. But the interesting thing is, you might think, well, Arbitrum has been around longer for some of these older chains, so it had a head start to get to 150. But actually, if you look at today's numbers too, Arbitrum is the leading, does the leading volume every single day in terms of L2s today as well. So not only is Arbitrum leading in terms of the overall metric, but every day it's adding more to that than any other chain. And that's just a symptom of Arbitrum being the home of DeFi and the leading DeFi chain, but also home to other really exciting verticals as well.
Yeah, so you can see this right here. It's official Arbitrum is the first L2, and you can see that just incredible parabolic sort of hockey stick curve of, I guess we'll call it adoption or usage there. But what, let me, I guess, ask you, what excites you the most? We have this world of seemingly 100 layer 2s. We have new ones every single day. It's hard, I think, for the average person to differentiate between them. So what's different between any of them, Arbitrum, et cetera?
So we have, there are kind of two ways you can break that. So there's Arbitrum 1 and Arbitrum Nova. These are their public chains. And Arbitrum 1, as you just said, in DeFi is doing more than anyone else. And again, in today's spot volume, Arbitrum did double its nearest competitor in L2s as well. So it's continuing to not only have that lead, but continuing to expand that lead. And if you look at other metrics like ETH on chain, Arbitrum has more ETH on chain and significantly growing faster than all other L2s combined. So it's just sort of very, very far ahead there. But when you mentioned, there are a lot of other L2s as well, and L3s also. So layer chains that are building on top of Arbitrum and other L2s. This is an increasing trend. And the cool thing is that most of these today are actually powered by the Arbitrum technology stack. So there's the Arbitrum sort of, you can think of them as the marquee chains. And then there's all these other chains that are also powered by the Arbitrum stack and also contributing back to the Arbitrum DAO. as well. So, and by the way, the really non-intuitive things here. So there's about, I think, roughly 35 announced chains. We call these Arbitrum Orbit chains. Some of these are L3 chains on top of Arbitrum 1. Some of these are Arbitrum chains on top of Ethereum, L2s, just like Arbitrum. But some of these are actually Arbitrum chains on top of other L2s. So for example, there's a chain called Degen chain, which is the most popular layer 3 on the base blockchain. That's an Arbitrum Orbit chain. That's running Arbitrum's technology because it is the best technology to run your chain anywhere in Ethereum, the best execution environment in Ethereum, whether you're building in the Arbitrum ecosystem or elsewhere. And that to me is really, really cool. So yes, it gets a little confusing with all these chains, but most of them are actually powered by the Arbitrum technology and contributing back to the Arbitrum DAO.
Yeah, that makes perfect sense. You mentioned layer 3s. I had done an interview with Sandeep from Polygon at least a year ago, if not more, and we kind of went deep down that rabbit hole. And he said there would be layer 5s, layer 6s, layer 7s one day. So then it comes to we understand the competition here between layer 2s, but now it's going to be scaling those layer 2s and then competing with chains that maybe say you don't even need layer 2s at all. You can do it all on one layer, right?
So it's funny because I remember there are some benefits of layer 3s, and what they are is it's basically, to get onto layer 2, one is onboarding. So to get your funds onto layer 2, say you're on Coinbase today, you're on Binance. So if you want to go to a layer 2, specifically for a new layer 2 that doesn't yet have direct support from the exchange, you'll have to go from the layer underneath it. So if you're onboarding via Ethereum, your costs are going to be, I don't know, tens to hundreds of dollars. If you're onboarding via a layer 3 to Arbitrum 1, you can go from Coinbase to Arbitrum 1 because all that support is there, and your onboarding fee to this new chain is going to go down to like a couple cents. So there's like some massive like pragmatic benefits of layer 3's technology for onboarding and keeping the fees low for new chains and the costs of users to onboard. But the cool thing is it actually mostly stops at layer 3. I don't think we're going to see this proliferation to like layer 15. Most of the technical benefits would be the same at layer 3 as well as layer 4 and 5, which is really nice. So I think we're basically seeing most of that today. There might be like some communities that form. That's another reason you'll see additional layers. Like you'll have like a base chain, and then you'll have other layer 3s in this universe. Like this is a design paradigm we're seeing where sort of a chain wants to be a chain of chains. But from a technical perspective, most of the benefits stop at layer 3. And I think we're probably going to see mostly layer 2s and 3s. And the funny thing is there's like a little bit of a stigma today around layer 3. A lot of people say, I don't want to be a layer 3. I want to be my own thing. Which is only funny to me because I've been in this space long enough to remember when that was a stigma to layer 2. We were the first ones to build a layer 2. We were the first ones out there in 2018 and earlier saying, hey, instead of launching your own blockchain, you should launch a layer 2 blockchain on Ethereum. And everyone's like, a layer 2, I don't want to do that. Like that, I want to be my own thing. And now today, everyone wants a layer 2. There's some stigma on layer 3, but I feel like it's the same trajectory, which over time that will go away.
Yeah. So you don't think we necessarily need layer 5s and 6s and 7s one day? Because if you talk about scale, 1 billion people on Ethereum, something like that, that's a lot of transactions.
I don't think so, because actually from a scaling perspective, you can put a ton of layer 2s on Ethereum. We don't even need a layer 3s for that. The reason for layer 3s are more pragmatic because if you want to build a chain, you could do a layer 2, but your cost of onboarding users, your cost of posting to Ethereum is going to be cheaper. One way to think about it is for layer 2s, you have to take the carpool to Ethereum. You got to pay Ethereum fees yourself. If you're a layer 3, you can take the bus to Ethereum, right? So you can package your transactions with all the other layer 2s and go to Ethereum. So there's some pragmatic benefits of being a layer 3. But they're not actually the scaling benefits in the sense that you can put many more layer 2s on Ethereum than we have today. So, and those things don't get cheaper in layer 4 or 5. So I think we're going to see layer 2s and layer 3s primarily. Again, we might see some of these communities that form. You might have a layer 3 that wants to be a hub of chains. You'll see like layer 4s on top of it. But like from a technical perspective, I think most of the benefits really stop at layer 3, which is a good thing because otherwise it would just be like daunting and confusing. Like every year we're just going to add in 10 years from now, we're going to be talking about layer 100. So the good news is I don't think so. And I think that it's sort of the technical arguments really stop here, and we'll be able to focus on primarily layer 2 and layer 3 adoption.
Let's talk more generally about what you're excited about that's coming up. Obviously, we have this sort of price action dip, right, that everybody loves to talk about, but I think there's still consensus that we're generally in a bull market. But every bull market, we have sort of these segments of the market that go crazy, right? AI is up again today because NVIDIA is doing well, and Apple mentioned that they'll have an announcement in 2 weeks or something that might be AI related, right? And you get the RWA, real world asset hype, and then it kind of diminishes, and then again. So what do you think we'll see come in the coming, year, 18 months that's real, that might be sort of a new killer app or sector for crypto that you're excited about?
Yeah, so Arbitrum, as I mentioned, is leading in DeFi today, but two up-and-coming sectors that it's doing really well in, I'm really excited about. One is gaming. Arbitrum has now probably about a dozen, not games, but gaming platforms that are building using Arbitrum Orbit, building Arbitrum chains. These include Zai, Hytopia. This includes Ape Chain from ApeCoin DAO, from Board Yacht Club. In terms of culture, Azuki recently announced Anime Chain on Arbitrum. So there's so much when it comes to like culture and gaming happening on Arbitrum. One game I love a lot is Pirate Nation by Proof of Play, a fantastic fully on-chain game, which check out if you haven't. And there's so many, and I'm for sure going to leave some out because there are just too many. But that's one area where Arbitrum is doing fantastically well. And the other one, which is actually a little bit counterintuitive and almost surprising to see so quickly, just happened yesterday. There was a proposal in the Arbitrum DAO, where the Arbitrum DAO has now earmarked about $100 million for RWA funds, because there are a lot of these RWA funds that go on chain, and then the question is, how can the DAO accelerate the adoption? Well, they can put aside some money to invest in these products that go on chain, and get yield in it just like anyone else would. So the Arbitrum DAO has earmarked, I think it's about $100 million for that. And the cool thing is, and this just happened yesterday and was on Twitter a bunch, really big traditional institutions have been coming to the Arbitrum forum to ask for those funds. You'll see Franklin Templeton posting in the Arbitrum forum saying, hey, could we be part of this program? Securitize on behalf of BlackRock went ahead and posted on the forum. So now you're seeing, like, people always said, like, oh, don't actually decentralize, just like kind of pretend and do centralization, because you're never going to like talk to a traditional financial institution. Like, they're never going to work with a DAO. Arbitrum was like differentiated there and actually went ahead and did decentralize. It set up a program that was enticing to, TradFi, big players, and you're seeing them actually come and work with the DAO for interesting opportunities. So that to me is like, I always expected that, to be completely honest. I don't think I expected to see it this quickly. That is really exciting to see happening. And those are some of the, I would say, RWAs, gaming, and DeFi are probably the three big pillars of adoption that I think we'll continue to see on the Arbitrum network.
Yeah, I always kind of comment on the fact that we get really excited about these trends and then nothing happens because it's not ready, right? But then a cycle later, we really start to see them come to fruition. And I think you highlighted gaming, and I think that to me is the one that has the best chance of really blowing up in this cycle, because I've seen so many games, so many actual AAA gaming companies outside of crypto starting to talk about adopting. And there are games, to your point, that have launched or are launching very soon that have sort of abstracted away the complexity of the blockchain side. And it's just a game where there's a crypto aspect.
That's exactly it. Where in the last cycle, if you will, the games were blockchain first and game second. And the consumers were like those who are like, I love the blockchain, and it's so cool that I can play a game in my favorite blockchain. And the world of those people is like, even though like I'm immersed in that world all day, and you probably are as well. So like it feels like it's a lot of people, but like if you zoom out, there aren't that many people that are like, I'll play a bad game just because I think it's cool. It's on the blockchain. The games of today are, like you said, AAA studios, like really good games, and games first. And they're appealing to large audiences. So if you don't care about the blockchain, you just want to play a good game, you can still play a fully on-chain game because they've extracted the experience away. And one of the reasons that games are predominantly choosing the Arbitrum Orbit stack is because it's super fast. The block times are like pithy, like you expect in a game, right? If you go to a different blockchain and it's a couple of seconds every time you press a button, well, that's not going to be very fun. And it's also super cheap, right? If your wallet's being drained every time you do something on chain, also not going to be a very fun game for those that don't care about the blockchain. So I always say the blockchain needs to be additive. It should add something for those that want it, but it shouldn't actually reduce the user experience for those that just say, hey, I'm just here to play a game. I don't care about this blockchain stuff. And that's okay. We want to take, and maybe we'll convert them eventually. And eventually, yeah. And eventually they'll be like, oh, I could take my asset like on and own it and take it to a marketplace. That's awesome. Or maybe they never will. And that's okay too. And that's, I think, the core difference. Like, at the Pirate Nation I mentioned before, Amit, who's developing that, he was one of the founders and lead developers of Farmville. Like, these are really established gaming players. And that's just one of many that are building fantastic games on the Arbitrum ecosystem and broadly on the blockchain. So I do think we've had a bunch of false starts in game. Some were over financialized as well. That was another theme where like, everything had to be earning, and now it's just like fun game.
Yeah.
And
like Axie Infinity, where people were literally like quitting their jobs to just press buttons all day because it paid for slightly more than their job. And people were setting up farms of people to play the game for them just to make money. It wasn't about the game, but it was a really good proof of concept, I think.
Yeah, and it took us cycles and times to build. We probably wouldn't be here today if it wasn't for those previous cycles and trying and understanding. But I think it's real now. And I was actually at the GDC, which is like the big game developer conference in San Francisco a few months ago, maybe a month and a half ago, and blockchain gaming was like a massive theme there. And this is interesting because this is like where the developers are. So you get to kind of see what the games of tomorrow. If all the developers today are focusing on blockchain, it kind of gives you a window. Okay, so what are going to be the titles that come out in like a year from now, year and a half from now? And that's sort of the alpha you're getting there. And like the largest booths there, including the Arbitrum booth, were the blockchain booths. And the largest center of attention there were the on-chain Web3 gaming. So I think that's really here and here to stay. And I'm very excited for the day in which we don't say Web3 gaming, we just say gaming, because that is Web3.
That's what we need for everything, right? We need to abstract away all the crypto terminology and complexity and the old meme UX and UI for grandma. I just have to laugh. Like there's literally a story right here in CoinDesk. AI tokens lead crypto market recovery as NVIDIA hits 1 month high, right? So it literally reflects exactly what I was saying.
Yes.
It's hard to take it seriously when, we saw it last cycle, obviously, Meta, Facebook rebranded to Meta, and every metaverse token went insane. But I guess that's a part of the charm of being here.
Yeah, absolutely. So I think, but the nice thing is, particularly if you've been in the space for long enough, you see the trends where it starts off as hype and then it becomes real and more real and it refines itself over time. And like, so it used to be, for example, people would just say, hey, just like throw everything on chain, like put your like medical data on chain. And I'm like, I always say like, that's like the dumbest idea. That's not a really great idea. Let's just say. Now people are refining it and say, okay, Web3 from my perspective is not a replacement for Web2. It's a complement for Web2. There are certain things that belong on Web2, like distributing content locally. That makes sense. There are certain things where centralization makes sense. And there are certain things where augmenting that with the ability to own and control and own and Web3 decentralization and censorship resistance, etc., really give you added benefits. And finding not the lazy thing to do is just say, all right, get rid of Web2 and put it all on Web3. The responsible and the hard thing, but the thing that will actually lead to real adoption is saying, where are those points where Web3 is actually additive? And we're finding really good examples there.
I need to just cook through a few news stories, and you don't necessarily need to comment, but it has to be mentioned that in the environment where we talk about all this building, we also have to talk about the fact that the United States is aggressively trying to stop all of us from building. It was mentioned yesterday, but people who didn't see, Robinhood got a Wells notice, which was a pretty big news. We saw Consensus last week, Uniswap recently. Obviously, we all know about Coinbase and Kraken and Binance and all of those things. So great headline. The SEC can't stop suing crypto companies. Then you have a wave of crypto enforcement actions that's coming within the next 2 years. So the CFTC chair. I mean, it's just a lot of rhetoric coming, I think, from all the regulators, even, the CFTC. Does any of this affect the way that L2s are building, people like you are moving forward, or you just keep building, it's noise, you maintain as compliant as you can, and it's just seems like a tough time to be building, certainly in the United States.
Yeah, I think like many or most others that I speak to, and obviously there are always bad actors in every place, in every space, but I think predominantly there are many, many, many more good actors in the crypto space, at least the ones that are building real protocols with lasting values or real users. And, obviously more clarity is always good, but we always do our best to make sure that we are on the right side. And I think that's true for most of the real builders in the space. And, I think one of the biggest requests over time is just give us more clarity and let us know, but we always obviously try to do our best. The nice thing about Arbitrum is that it is a decentralized network today. I think that's actually quite important. I do think that there is some in some areas decentralization theater and which are things that are sort of look decentralized but are actually centralized. I think actually staying true to the real values and building the real decentralized thing is going to be the important thing. We just keep building, and that's what we do. We keep building in the most true and compliant way that we know, and that's building really true decentralized technology. And I think that's obviously on time. Hopefully, more clarity will come. But our mission is to continue building the real true thing. And I think that's true for most of the builders that I come across with that are building the real protocols that attract real users. But sometimes, unfortunately, a few bad apples pollute the reputation of the ecosystem, and sometimes I guess it's hard for a regulator to really discern who are the good apples, who are the bad apples, and we see unfortunate ramifications of that.
What are your views on decentralization in general? Not like a topic I necessarily intended to discuss, but to me, we get caught up in the centralized or decentralized, and it's probably more of a sliding scale, right? I mean, there's only so much you can be decentralized and still functional, and then obviously you have to talk about if you're hosted on an Amazon web server or Google Cloud, are you truly decentralized? So, like, what are your thoughts on decentralization? Is it just a goal to be as decentralized as possible?
Yeah, so it's definitely a sliding scale, and actually, like maybe counterintuitively, I don't think decentralization is the goal at all. I think it's the decentralization is the best tool that we know how to get to certain outcomes, and those outcomes are more like things like censorship resistance, open innovation, right? The idea that people can like lowering the barrier to entry for DeFi protocols or gaming to actually build an open economy and a shared economy in a way that censorship is not, there's not some party that can like just shut your account down overnight because they decided they don't like you, and there's like, or just lock down your IP or things like that. So I think there's a lot of benefits of openness and censorship resistance and other properties that are emergent. At decentralization is the best way that we know of how to build that. So decentralization does become sort of the intermediate goal to get there. And there's definitely a spectrum of decentralization. When you have networks like Ethereum, like all the way on one end of the spectrum, I think layer 2s that are truly decentralized are very, very close to Ethereum. And then you have networks that are, I would call, very centralized or de facto centralized, right? They might be decentralized in theory, but considering the parameters of the network in practice, there's only a couple of people in the world that can actually participate in running the network. Those become more centralized networks to ones that are like just AWS, which is actually just centralized. So the answer is, like you said, it's definitely a spectrum over a spectrum. But I also think it's important for us to remember why we're here. And I care very much about these properties, and I care very much about decentralization, but also realize that as we expand and go mainstream, more of these people that are coming in will care less and less and less about these cool properties, right? People might just be coming into crypto because they want to buy that cool NFT, and they don't actually care that it's decentralized. But like, we have to remain true to what we're building here. I'm not here, and I haven't been here building for the past 10 years of my life to build something that ends up centralized. It's just a different set of actors controlling it, right? That would be a big failure. And that's, I think, a core difference of our industry, right? If you're like selling widgets on Amazon, all you care about at the end of the day is how many widgets you sold, right? It doesn't really matter, as long as you didn't do anything super unethical to get there, or like, how many widgets you sold. The end goal is what matters. But when we're building decentralized technology, I think there are some out there, and one of my criticisms of other teams is they focus too much and too early on growth. And that's their sort of like leading metric, where like, no, that's not the way. If we like grow Arbitrum like to 100x, but it turns out that we have to centralize in the process, big problem. Like, send me, I'm out. I don't want any part of this, right? So we have to actually remain true to what we're building and say we have a responsibility to those users, and we think decentralization is important, and we have to remain true to that, even if the market now is saying, we are okay if you're centralized, because the theory is that there are true benefits of this technology, and they will be emergent over time. So I think just staying true to the values and not putting growth over sort of the values is sometimes hard to do. And the best is to have both, right? Arbitrum is decentralized, leading decentralization, and also leading when it comes to just about every growth metric. But that's, to me, is the hard part, which is not to get too focused on the growth metrics, but actually make sure that you're building the real deal at the same time and never compromising there.
Really interesting stuff. I have so much trouble not being non-technical, differentiating between all of these things. And now, of course, maybe it's a conversation for another day, but now, of course, you have everybody attempting to build all of it on Bitcoin too. There's just a lot going on in the ecosystem, but at the end of the day, I think it's just really encouraging to see how many people are passionately building.
Absolutely. And that's, the really thing to focus on here. There are so many really amazing builders in the space, and sometimes we get competitive with each other, but we're all, or most of us, are rowing in the same direction and trying to, find the ways to actually bring this decentralized, new, innovative technology to mass market. And I think that there's a lot more in common that we have with our quote unquote competitors than not. And we're all sort of doing, there's a lot of shared benefit from the work that we're doing. So yes, this is early on, and the pie is growing so much, and we all sort of, I think are contributing to the same result.
Awesome, Steven. Really great insight. Thank you. I'd never really dug in deeply to Arbitrum, and we hadn't certainly done a show on it. So it was really helpful to get all that insight. Everybody, you can follow Steven. His Twitter, X, whatever we're calling it these days, is down in the description. I highly encourage you to follow him. Thank you so much, Steven. It's a pleasure.
Thank you for having me.
Awesome, guys. Really great insight there. Like I said, I'm so busy making content to doubt it. I just see all these layer 2s and layer 12s and 19s and get caught up in the weeds. So it's good every once in a while to get some insight as to how they're differentiated. I want to briefly, before I bring Andrew and Tillman on, I want to talk about the title here. Bitcoin's wild ride plunge before the surge. This is based on this article. Bitcoin rebound has crypto options traders anticipating 100K. So I don't know how we're talking about 100K when we simply bounced from the 50s to the 60s. But this is basically on the fact that there's exceptional bullish market sentiment with higher call contracts than puts at the moment. And those calls are largely in the 70 to 100K region for out of the money calls. So just shows you that we're back to having traders, even though we're ranging sideways, starting to make bets on future price action being much higher. Now, these are for end of the year. I think it's very likely they'll hit. If they're in the coming week or two, months, I don't know. We'll see. Maybe we'll get some insight from the men from Arch Public, Tillman and Andrew. Good morning, gentlemen.
Good morning. How are you?
Good morning, Scott. I wish I was where you are. What is that background that I'm looking at?
This is a reflection of the beach in front of me in Puerto Rico.
Nice.
Down here exploring my libertarian values with the crypto guy. I was with Peter Schiff for like 2 hours last night. We didn't even argue about Bitcoin and gold at all.
Wow.
We just talked about life in Puerto Rico. It was amazing. Actually, a really fun and entertaining guy to be around. But it's been a good time down here. But I'll be traveling soon, so won't be on tomorrow.
You should go throw some fruit at David Bailey. He's running around in Puerto Rico somewhere down there.
Yeah, he's like the king of a certain neighborhood here. I don't want to get into deeply into it, but jokingly, the guys where I'm at are like he's the Scarface of this other neighborhood. That's the big house, with the casitas with people and his family and stuff. So yeah, there's a huge Bitcoin community. Down here, so it was a good place. I'd never been, so I figured I would come down, check it out, take some meetings, and hang out for sure. So want to talk about what you guys are doing, though. Maybe give us a quick update. What's going on?
Yeah, sure. We had a losing trade the day that we had our last podcast with you, 4:30. It gave back 2.8% of what we had made this month or over the last 30 days of trading. It still is an important lesson, and kind of what we wanted to go through today is why automation helps you when you're in a losing trade. And so let's look at the chart right now. And we took this opening long right here, and this was indicative of the gap. So this was betting that the overnight gap was going to get closed, which the gap was down. So we took a long position. That long position, it did not reach its profit target. It got capped out right here, and it turned against us. We stayed in because the automation didn't reach its stop loss through this violent downturn. And then this rocket ship back up. So all of this, if you're live trading this is what we call the emotional whipsaw roller coaster. This is the ride you don't want to take, because most people make very bad decisions when these types of whipsaws happen. So then you go straight back up, you reach this cap again, you can't pierce it, and then boom, you have this waterfall effect that takes you down to your stop loss. Okay, well, it's very, very psychologically hard to time your entries and your exits when the market is whipsawing like this. But there's no emotion involved to the exit of the automated strategy. You set that as a user prior to turning it on, You could be completely asleep, away at the gym, at your regular job. You could be doing whatever else you want to do, and you don't have to suffer the whipsaw. You're oblivious to it. There's something that is driven that's managing that emotion for you and getting out at predetermined levels that you had already prescribed to prior to the trade being placed. So it's a tool that's, in my opinion, the crux of why automation is going to be here to stay, is that it removes human emotion, both good and bad. So let's take it from here. Let's just say I was manually trading this and I see this bounce and I see this rounding bottom. Well, most traders that are technical in nature are going to say, okay, we've got a rounding bottom after a big waterfall. There's going to be at least a 50% retracement into this fair market value gap. And so I'm gonna play this. Like, this could be a nice long play right here. Well, what does it do? It does exactly what the market always does, the opposite of what you think it's gonna do. And it turned against you, and it took it all the way down to the very bottom of the depths of the chart, right by the performance report. So most people, if they were manually trading it, including myself, would have exited much, much lower than the stop loss was triggered. And so the point here is that this trade on a $10,000 account would have lost you $281.25. And we think that's a measured loss. Like, we feel really good about those losses because we know human nature would have caused us to lose a lot more than that if we were trying to catch it manually. And so that's really the lesson here is that you have predetermined stop losses that are half the length of your potential profit targets. Well, that builds you this mechanical advantage of having a profit factor greater than 2. And that's really, exposure to profit factors greater than 2 and exposure to winning percentage rates that are greater than 50% is where you want to stay. And in trading automation allows you to measure that on a day-to-day basis. Well, here's the good news. This trade didn't turn into a catastrophic loss. Why? Well, number one, the stop loss took us out at a $281.25 loss. Number two, there's no trade that we could have placed today that would have lasted into the overnight session. So every day you get to wake up with this fresh mentality, this fresh perspective, and you get to take it, for what the day can bring you based upon that measured approach and not bringing any of the past losses. Because if you're carrying a loss overnight and you wake up the next day and you pull up your account and you see that the overnight session is going against you even more, psychologically, that's very, very hard to overcome for getting yourself in the right mindset to make good decisions for that day. So it's really the avoidance of all of this stuff is the emotional roller coaster is the main thing that you're focused on.
I just can't believe you took a loss and you're admitting it in public. I love that. That's the whole point, right? The transparency, the fact that nobody's claiming it's perfect. You just win more than you lose. And as you said, your runners run a little further than your losers do.
That's
very
right.
simple,
And
but people we all fuck it up when it's actually our turn to do it manually.
well, and we're not hiding the strategy behind what this automation is doing. You can manually trade this. If you think this is a great sound strategy and you're going to trade the opening gap, there's nothing that keeps you from waking up at 6:30 in the morning and sitting at your computer and trying to beat all the automated strategies into the market on that opening candle. You can do all that. We just know that it's really, really difficult and it's very time consuming and it eats you up emotionally. And so what is automation doing for you in this instance? It's allowing you to participate in trades that you otherwise wouldn't or shouldn't participate in because it's too taxing on your life. So it's exposure and diversification into time periods and portions of the market that otherwise you kind of tend to ignore because they're too intense and they require too much attention.
Yeah. Andrew, any thoughts?
Yeah, the thoughts is that there's, our algorithms are associated with at minimum 3 levels of math and sometimes 4, right? So you're talking about a stop loss.
Layer 3 and 4?
Yeah, right. There are layer 3 and 4 with our algorithms. But as Tillman mentioned, you're looking at over time a 25-year period of a better than 60% chance that gap is going to close. So that's layer 1 of math, right? Layer 2 of math is a profit factor above 2+, right? That's another layer of math, right? Then you've got stop loss protection. That's another layer of math, right? And then our martingale strategy inside of our gap strategies, that's another layer of math. So we're now on layer 4, Scott, as you like to say. We'd like to get more layers, but that's 4 layers of math associated with an algorithm that you can set it and forget it. And again, with our institutional grade execution partners, all you got to do is just simply follow it on your phone. You're not downloading the platform. You're not following charts. You're not stuck in front of your computer, right? You can leave your computer and go have fun in Puerto Rico and do whatever it is that you want to do, and let the algorithm do its thing. It's layers and layers and layers of math that are working for your benefit without your emotional involvement.
Before I go back to having fun in Puerto Rico, Andrew, I have to throw you some red meat. I can't help it. I was going to let it go, but Grayscale spot Bitcoin ETF logged second day of net inflows. So the good news is that we had all the outflows last week. Those have been more than compensated for in inflows. Yeah. I think Eric Balchunas had a great tweet thread about it, basically saying, listen, this proves that people aren't paper-handed. We dropped, 20%, and that they largely didn't sell. A few of them, 90% of the people, I think he said, held. But how is Grayscale?
Listen,
is it temporary? Because I know you love them.
There's 2 ways to answer this question, right? There's measured and considered, and there's conspiracy theory, right? So I'm going to start with measured and considered. They have billboards across every airport in America, and they advertise to the 17 people that daily watch CNBC. So some of those people decided, I want access to a Bitcoin ETF, and they chose Grayscale and their ridiculous fees. The conspiracy theorist in me says, I wonder who decided to put $60-some million into the most expensive Bitcoin ETF on the planet the day that happened. I don't know. I wonder. There are folks that certainly can do that. And oh, by the way, deposits into Bitcoin ETFs are not on chain. You can't go find who put it in there, right? So, I don't know, man. I don't know who's buying a Bitcoin ETF that has 150 basis point, fee. That doesn't make any sense.
That's the beauty of the law of efficient markets, is time will tell, because no one will continue to buy premiums that they don't have to buy if they're knowledgeable about an alternative that doesn't have those premiums. So time will flush this out, is the point.
Yeah.
Well, and they had those inflows, kind of at they had the longest history of outflows in the history of like ETFs, like 80-some days in a row, right? It was like, I think Eric put out a tweet that had like the blood rushing on The Shining or something, right? It was crazy.
Well, maybe it's like a good restaurant. Like if I see a bunch of people coming out of it, I go into it thinking that there's good food.
You learn the hard way when that happens, generally.
Tillman's doing a good job of playing defense on my potential conspiracy theories that could come out of my mouth right now. So I'm going to leave it right there.
Listen,
I love my partner.
I just believe in the simplest answer is most likely the right answer or the truth. And the simplest answer to me is that Bitcoin carries a very big brand. And there's a lot of people out there that do a lot of crazy and dumb stuff, including pay too much. I mean, go to the airport and see how many people are buying bags of peanuts for $17.50. I mean, it's
yeah. I don't know. And then, I do have to go, but Andrew, then the SEC just with the Wells notices, man.
Yeah, it's not going to slow down. And the reason, I love John Eaton, right? Great guy running for Senate in Massachusetts. But the reality is he's running against Elizabeth Warren. That's not, that's going to keep the pressure on. That's flat out going to keep the pressure on, and she's going to keep, twisting the knob with Gary Gensler, and the reality is what we're seeing on the ground. The Wells notices are going to keep coming. Robinhood has been in crypto for 6 years and not a peep out of the SEC.
And they delisted everything that the SEC was kind of labeling.
Yeah, tons of meetings with the SEC. They've had conversations, lots of conversations, and so it's just it just kind of is what it is right now. What I will say though, and I put out a tweet late last night, to buy as much Bitcoin as you can right now, and that it's going to 150K. One of the reasons behind that thesis is that all of this action against securities and all that stuff, it's going to keep pushing people into Bitcoin. It's going to keep pushing the money into Bitcoin, right?
It's going to be a consolidation of the market for sure. Yeah, 100%.
I mean, we've seen that, right? I mean, the spot ETFs, that money is what's quote unquote different this time is that money doesn't flow down. We've seen it in the past, but if it's sitting in an IRA and IBIT,
correct.
There's no way to decide one day that you want to go flip that into,
dog with hat,
and then flip it back when So yeah, I think that is what's different. So before we go, we got to we talked about obviously the losing trade there, which is great transparency, really small loss in line with what someone would do if they had perfect risk management. How can people get involved? I know we've seen a ton of people in the chat who are a part of it. So just want to give the soft pitch.
Well, if you go to thearchpublic.com, and our entry level product is $99 per month. And it's a proof of concept product where you're going to, there are percentages associated with our product on the website. It's clear and concise. In our concierge program, we bring people on every month. Those are larger products that people can put more assets into and benefit on a bigger scale. But we've brought on a ton of folks in the last 3 months. Everybody's really satisfied. And we focus on the service and the process and the concept of what it is that we do. We don't love to run around with a big old sign saying, you're going to make this much money, right? We want people to really commit to the process of automation. I had a conversation yesterday with a couple of guys who said, we're really interested in the concierge program. And what's the background here? And they're like, we made a ton of money in 2021 on NFTs. They may be the only people that did. And they said, but it's exhausting, right? We want something that we can commit to where we don't have to spend our entire day committed to the process of going through it. And that's exactly what our brand is. It's the math, but behind layer 1, layer 2, layer 3, and layer 4. And there's an entry-level product that you can get.
Yeah. And I would just add to that, if you've ever heard of automation, it does exist. You can actually use it on your own computer. We will give you the software to do that for that $99 subscription fee. We can prove to you that you can have a real tool that removes the emotion, that allows you an advantage in your trading activities. And that's US based, with TradeStation being the broker dealer that manages all the trades and the platform that you download. So it's as customer friendly as any automation that exists. That's the point of this, is to educate people and bring them into the education and into the relationships with us, TradeStation, and whoever their execution partner is, if they choose to go that route. It can be a completely seamless process whereby which they've got all the experts to help them in those various areas.
Awesome, guys. Thank you. Appreciate the alpha as always. I'm going to go try to hit the beach before it rains. So and everybody else, I'll be off tomorrow. So I'll be traveling.
Awesome, man. Thanks for the time. We appreciate you.
See you, Scott.
Of course, man. I still don't miss them when I have a chance. All right, guys. Thank you so much. Everybody else, I'll see you, I guess, tomorrow afternoon. I will be back, but and then on Thursday morning. Thanks, guys.
All right, Scott. Have a good one.
Let's go.